some of it the realtors in the audience might, well, all of you will get a kick out of it. A little background on me. I'm 34. I've lived in Santa Barbara since last June. I decided I wanted to find out what my favorite place on the Pacific coast of the United States was, so I went from Imperial Beach, San Diego to Victoria, Canada, taking how people treat each other, weather, climate, beauty into account. I figured I could do all right and work from anywhere that speaks English with technology and my staff and the systems that I use. And I chose here. I like Santa Barbara a lot and kind of created my own little dream life. Now, 1 week a month I am in the Sin City. I'm in Las Vegas. Was there 14 years before I moved here, but I still have residency there. I'm maintaining my entire car insurance, registration, taxes, everything. I'm keeping Nevada, but enjoying the benefits of California. I'll pass on the red tape of this state, but love living here. Love the weather, love the people. Little update on rates. They're low. They've never been lower. They're 3 to 4%, depending on how much money you're putting down, your credit score, and the type of home you're buying. There's that saying, buy when there's blood in the streets. There's blood in the streets, and for the first time in a long time, here in Santa Barbara, and a lot in Las Vegas and Henderson, you literally have people that are getting into a position where they don't have to short sale. Within the last 2 months, they can become traditional sales. Hundreds of thousands of them in the Las Vegas Valley, and plenty of them here. It's of special interest maybe to realtors. The amount of people that you can actually list homes for are increasing because it's appreciating. All of Las Vegas and Henderson, I hope not too fast for our own good. I hope we learn from our mistakes, but the same thing's happening right here in Santa Barbara. Any property under 600 grand in Santa Barbara right now that realtors are putting offers in, there's a full-on bidding war. They're going 50 grand over list, and it's going to remind you of 03, 04, 05. So we're back. And maybe for a small micro bubble, maybe not. But just wanted to share a little of that with you. One thing I feel is important for people to know, and there's a lot of people in the real estate industry that don't know this, is the different types of outlets for financing. You hear all these terms: mortgage broker backed, big bank bankers, small bank bankers, broker banker, first right of refusal banker. What does all that mean? And I have a little way of explaining that. In the lending world, you have big banks: Wells Fargo, Citibank, Chase, U.S. Bank, Bank of America. They are the most conservative, strict, tight lending guidelines in the industry, and the worst interest rates. Now that's just the truth. With the exception, if you're getting jumbo money and Wells Fargo loves you, they're unbeatable. If you're building your dream home and it's a construction of permanent financing loan, I can't even help you. No one can, except U.S. Bank and Chase. And maybe a local community bank if you have a lot of money and they really trust you. Other than that, they're not necessarily the best sources, and I'll straight up say it, they're the worst. But some people have a sense of security, whether they be home buyers or whether they be realtors. That sense of security is ill-founded, illogical, just flat out stupid, in my opinion. But my opinion is based on a lot of experience and facts. And numbers don't lie, people do. Just look at the numbers. So big bank bankers, very conservative, high rates. Then you have brokers. Brokers are like wholesalers. They can go to anybody. They can pretty much beat any banker. They have access to the lowest rates and the most liberal products. There's a loan out there for every type of person. There's a lot of niche lenders, certain banks and wholesale entities that will do things no one else will. There's a lot of those out there, and more coming to the scene. If you work for a big bank and you don't have the knowledge of those other entities, you're declining lots of people that could get financing. And that becomes a very special interest, I would think, to real estate agents. I speak in Las Vegas a lot, and one of the little seminars I give is to real estate companies is how much money is your loan officer costing you? Because if people aren't going to the right sources of the money, they're getting declined and not knowing that they can actually qualify and buy a home. So that's broker and big bank banker. Then you have Directors Financial Group, Prospect, Academy, Countrywide, back in the day, W.J. Bradley, those type of entities, and those are bankers. They're owned by a few men or one guy or a group of individuals. and they fund the mortgages with their own money. Well, because it's their own money on the line, their money along with warehouse lines that they guarantee. So because it's their money, they put their own restrictions and overlays on top of the macro guidelines of, say, HUD, FHA, Fannie Mae, Freddie Mac. So while they're better than the big banks, if you're just a normal banker and you cannot broker, you're still going to be in the same position as the big banks. Yes, you're going to have better rates. Yes, you're not going to have as stringent of guidelines, but you're not going to be able to fully service your clients. Now, if you take a combination of the smaller banker, rather than B of A, Wells Fargo, Citibank, and you combine them with a broker license, well, then you have the best of both worlds. And no matter what, if there's financing out there available for the individual, they're going to be able to place it. But then what happens at broker-banker operations is the owner says, we want first right of refusal. So even if you know, my place directors isn't going to do this deal, I need to broker it to FPF or Union Bank or Luther Savings or Bank of the Internet or whoever it might be, then you have to wait and put your client through underwriting knowing they're going to get declined. And then once they're declined, you're allowed to broker it. Now, if you're a top producer and all the headhunters and companies are after you and I'm that guy, then they'll give you no first right of refusal, broker it if you have to, or do it in-house. That, in my opinion, becomes the best way, because then you're unbeatable. I can't be beat by any big banker unless it's an $800,000 to $1.5 million jumbo and they know about Wells Fargo. I'm going to lose. Or they want to build their dream home. I literally send the people to U.S. Bank or Chase. U.S. Bank's better. But they both serve a purpose, you know, depending on the individual. I'm licensed in California, Nevada, do a lot of business there, but we have a relationship with a federally chartered credit union that allows us to do all 50 states. I don't like to go after business in other states, but if somebody doesn't have the world's craziest messed up situation and they want to use me to buy a home or to refinance, I'm happy to do it in any state out there. I guess I touched on this a little bit. There's very conservative banks that are strict and stringent in lending their money, and then you have liberal banks that will allow things that no one else will. One thing that a lot of people nowadays are either getting foreclosed or short selling, and they're curious, if I short sell my house or if I get foreclosed on, and at the end I'm going to touch on short sales in the market, but if I short sell my house, how long until I can get financing again? And there's a lot of misinformation out there. And there is a difference between if it forecloses and a short sale. So let's start with if it forecloses. If it forecloses, you have a scarlet letter for 4 years. You're not going to get any type, well, let me rephrase that. If you get foreclosed on, conventional financing will not touch you for 4 years. And that's only for 90%. Then after 7 years, you're open to all financing. If you get foreclosed on, FHA government financing will let you buy after 3 years. With a short sale, conventional will let you buy after 2 years, but you have to put 20% down. And then after 4 years, you can put 10% down. After 7 years, you're open to all financing. Now, these things are subject to change. If you short sale, same thing. FHA does 3 years. FHA and conventional. FHA views short sales and foreclosures the same way. That's something that a lot of people hear all kinds of weird stuff, but what I just told you is the verifiable facts, guaranteed. Now there are credit unions, like Aloha Pacific Credit Union out of Hawaii, some local credit unions around the country, that will, even 6 months to a year after someone's foreclosed on, short sale, or bankruptcy, will give them financing. Now they're going to want 20 to 30% down, and the rates aren't going to be 3.25%, 30-year fixed. It might be 5 1/8 on a 5-year arm. But at least there's some credit unions that will do that. Keep that in mind, because that could help realtors to be able to sell houses as well. On purchases, There's FHA 203K loans, which might, I do a lot of those. I hate them, they're a nightmare. I don't do a lot, I did 4 last year, okay? And I try my damnedest to talk realtors out of a 203K offer, find a different property. But if you're interested in that stuff, give me a call, I'd be happy to help you out with that stuff. Reverse mortgages, I have a passion for reverse mortgages. I think they're wonderful. I think that it's a huge benefit. Not the refinances, but I use them for purchases. Say you have an older couple that wants to buy their dream home. They're both over 62 years old, but they don't qualify for normal financing. They're going to qualify for a reverse mortgage. And instead of paying cash for the house, and they're going to buy their 200 grand dream home, they can qualify for a 400 grand house, put about 40% down, 160 down, and never have a mortgage payment for the rest of their life. Ever. They're responsible for taxes, homeowners insurance, and an HOA if there is one, but they're never going to have to make a mortgage payment. Their interest rate may be 4.5%, and let's just use round numbers, say they buy a 400 grand house, they put 160 grand down, they got a 240 grand balance, and after 12 months, they've accrued, and their payment's $1,000 a month. That's not true, but let's just say it was. After 12 months, it's $12,000. At the end of that year, instead of them owing $240, their principal balance is $252. It's increased. But it's Peter Paul. If they want to maintain it the same, make the payment. They don't have to make the payment ever again. If they ever become upside down because they stay alive longer than FHA had predicted, kudos to them. They had a good life and got their nice home and never had to make a payment. Well, what about if we, and the husband and wife do it together, they're secure. If the breadwinner of the family dies, this individual is not going to qualify to get another property, period. But if they have done this before the other spouse passed away, they're locked in on golden time for the rest of their life. Now, what if they both pass away? The family gets 12 months to get rid of the property. Sell it to Uncle Jimmy, refinance it, or just sell it on the market and sell the house. They don't make you, handle things within 90 days or stress out the family or the executor of the estate. It's a fascinating thing. I love them. I think they're wonderful. Another neat thing is they have now, and I'll just say it, Union Bank puts it out. I broker it to Union Bank, but it's called an Economic Opportunity Mortgage, an EOM mortgage. What an EOM mortgage is primarily used for in this market is condos aren't warrantable a lot of the time, and Fannie Mae won't give them an 8821 designation, so you can't get conventional financing on the condo project. FHA won't give them HUD approval for the project, so it almost becomes like if people don't pay cash, they can't buy the condos in this particular complex. With the Economic Opportunity Mortgage, people that are qualified for FHA will meet the requirements for the EOM program. It's 5% down, no mortgage insurance. So instead of 3.5% down like FHA, they put 5% down with no MI. If it's owner occupied, they don't own the property currently, and they don't make more than that county. Like if it was here in Santa Barbara, they couldn't make more than $107,000 combined. So there are restrictions depending on what county you're in, but it becomes a deal maker. It becomes something that if you have knowledge of it, you're going to be able to do business that otherwise people don't even realize could be done. Another neat thing, California has what they call the California Access Program through FHA. And what that allows is anybody that's qualified for an FHA mortgage, instead of 3.5% down, can put 0.5% down. And if the credit score is good enough, the other 3% down payment's forgiven. If it's not, they got to pay it back on a little tiny note. So if they buy a 300 grand house, they put $1,500 down, total down payment. Seller pays the closing costs, and they're either going to owe the $9,000 financed on like a little tiny second payment each month, or it's going to be forgiven. That's something that's...
It's called the California Access Program?
It is. There's only one bank that offers it, but it becomes the beauty and the reason why I have 18 deals in escrow right now, and every month have this, I finance 15 to 20 houses. I make a living. So it's because of knowledge. It's, you don't know what you don't know until you know it, and I pride myself on knowing a lot.
Is that through Union Bank of California?
No, I won't tell you what's through.
Do they have do they have
I'm honest. You want to call it Union Direct and do that crazy program, you
do
can,
they
but...
have like has to be something that
Say again?
Do they have an area restriction?
They do. It even gets complex, and I don't want to get too into it, but it's based on the census tract, the economic opportunity mortgage. So sometimes, let's say they make more than $107,000 a year. If that tract of that area that they're looking in is deemed in,
Qualified
the
area.
color is yellow on the map. You know, I pull it up, it's like a GPS, almost like looking at Google Earth, but it's through the census tract. Then they're exempt from the income requirement.
Okay.
So I don't tell people that a lot because, you know, it just depends on the property and the individual. And when I'm pre-approving people, you know, I can establish all that for the real estate agents,
So you're a mortgage broker?
banker and broker. Yeah,
Investment banking or?
neither. Residential. And just to be totally clear, I'm a slave to top producing and mega realtors. I have no boss in life. One of my best friends owns Director Financial Group, but I'm employed by realtors. Realtors have someone that wants to buy a house, they won't put them in their car until I do what I do. Yeah. And one of the things that I think the realtors, I know you guys will find it kind of wow, it's kind of neat. I have a system I'm going to share with you guys that I've sold my soul to Apple, Google, and Dropbox. But it's a good way to go. It's a neat little system for tracking and dealing with a volume of business and never dropping the ball. You gotta have the right staff too. I mean, you gotta have people are the most important thing, but the right technology and systems are huge. Yes, ma'am?
I have a question about, when you say that you do residences, is that what you said? Okay. So-
Only residential financing. I don't do
Residential.
commercial, I don't do investment banking, I don't even know what wholesale notes are. You know, I don't. So, I know a lot, but I was like, I don't know what that is.
So you can
But I've
help,
been hearing it lately.
so you can help someone secure financing for, let's say, like a fourplex or less,
What?
is that right?
Correct. Oh yeah. Not that I'm just only doing SFRs and condos. I can do SFR, condo, townhome, tenant common. I have a lot of Bay Area business. My California business is Santa Barbara, but mostly Frisco and Orange County. I just happen to be friends with lots of engineers, and some of them work for Cisco and different companies that are based up in San Jose or San Francisco area. And they're all like buddies, so I finance a
Do you
bit
charge
of
flat,
Frisco.
do you charge flat fee or?
Yeah, $200 a loan, damn near free. No, I'm just kidding.
Because I found that somebody was flat rate, so do you charge flat rate or?
What was the flat rate of the person you found?
The mortgage company,
Sure.
$700.
I'll do it for $5. I'll do it for $5. Okay.
I mean, they don't have a high percentage increase on, for,
Just stick with them. No, I mean sincere. I deal with a lot of Persians, Armenians, Chinese people. I have a lot of realtors that are Chinese or Armenians or Persians and even Nigerians. You know, I'm the official lender for the president of the Nigerian Council of Nevada, Charles U. Sigby, and his clients. But some of those types of clients, I wish I wasn't the go-to guy. You know, because I want it for free and I want 3.25%. Go get it. You know, but I can do it for $200 if I want. But you said, but if they're expecting 3% par type of rate and me to charge $700, I'd rather die. Because that would mean I'm doing I would literally make nothing off the rate. I make $700. I would never do the deal.
$2 an hour.
Yeah, right.
I mean,
Wait.
you want a good program, you're gonna have to pay for it.
Well, no, and you get what you pay for it. So this is what you're talking about. Say the name. What's the name of the company?
I forgot.
It's probably like Cash Cow out of Lake Forest, California. Directors Financial Group is out of Lake Forest. But a Cash Cow, the loan officer that the people deal with, is Cash Cow. Yeah, call Cash Cow. It's like a payday advance place to get mortgages.
$700 is not cheap and great.
Yeah.
Because like a lower average fees, like for the loan, like, I mean, that's.
It all varies. It all varies. What I charge our company, because I'm a broker and a banker, I can structure it however I want, and I'm 100%. Okay, they get a little piece of every deal I do, but I do a lot of deals, so the company I work for makes a bit of money off me. I can structure to where the closing costs are zero,
I mean,
but they're not going to get the lowest rate on earth.
they will have increased percentage.
Correct, but you said your company won't, so I say they're the best on earth and you should stick with them. But if it's a cash cow or a $700 flat fee type of company, you're dealing with some loan officer that gets a $2,000 a month salary and doesn't know shit from Shinola most of the time, excuse my language. So he won't have the knowledge of all the different products and the guidelines of what some banks will do and what others won't. I'm a geek, I read underwriting guidelines and product profiles. I can know what every bank does. My biggest fear, because I work with big ego realtors, is that they send someone to me that I decline, these people can't buy, and they end up getting financing somewhere else. That never happens.
Actually, my
I won't-
broker introduced me to this guy.
Yeah.
So I don't know, I haven't got the loan yet.
And here's what I always love. I love the phrase, numbers don't lie, people do. And if I'm dealing with a rate shopper, my spiel never changes. Okay, I'm not gonna be the guy to give first numbers. I want you to talk to your 10, 20 frickin' banks, go nutso on the internet, drive around the valley, LA, and Frisco if you need to. Go to Washington, if you hear they have the cheapest mortgage companies. Because rates change every day and put them through their own little private hell. So I let them go through that. And then when they get established what they feel is the best, I say, send me the numbers in black and white, but do it before 3 p.m. on a business day. If I can beat those numbers, I lock them in, I beat the numbers. If I can, I shake their hand and say, congratulations, you got a rockin' deal. Like somebody with great credit that wants an $800-900 grand loan and puts me up against Wells Fargo, I lose. It's about the only time I lose, but I lose. I can't, I gotta say, congratulations, cash cow. Good luck if they perform, because sometimes they don't pre-qualify the people quite as accurately as they should. So the realtor just wastes 40 hours of their life and never gets paid or makes a dime because they weren't, but it all becomes individual. I'm sure at that flat rate company there is knowledgeable, good, competent loan officers.
So is this company you work with?
This one, yeah.
Yeah. Cool.
So, anyways, I kind of lost track of where I was. So as far as fees go, I charge whatever I feel like. Every deal's different, and I do whatever I want. It is just the truth, okay? Usually I'm going to charge processing fee, $5.95, and I'm going to charge underwriting fee from whatever bank I'm going to's underwriting fee. And if the people are a stickler for cost, or I have to beat Bank of America and meet or beat their fees, I can, I'll beat their fees and beat the rate.
Do you have
On a rate
fees
shop.
on your website?
No,
No.
no,
Everything's
'cause-
structured per deal?
no. Every deal's different.
That's what I'm saying, everything's structured by the deal.
Yeah.
Yeah.
And there's more variables than one could ever list on a website. I mean, really, I could wow you with some of the
Appraisal
situations.
fees.
I mean, right now I'm doing a loan for a woman that works full-time in Turkey, lives in Turkey, files her taxes in America, converts the Turkish dollars to American dollars. Her daughter just moved and is going to be working for UCLA, makes no money, but on the kitty condo clause I found out about, having a passion to figure this out, I was able to find one bank out of 1 million wholesale lenders I can go to that would accept this crazy Turkish woman's Sukran situation, let me have a certified translation company, take all the Turkish documentation. I mean, it goes on and on, you know what I mean? And so it's like, you list on the website, well, if they're crazy and from Turkey, and we charge this. But I'm giving them 3 3/4, they're getting 3.75, 30-year fixed, FHA, and I'm not charging any origination. Am I charging underwriting and processing, and is it more than $700? Yeah. Are they gladly paying it? Yeah, they don't say nothing. Because their other alternative was hard money at Aethys Capital. Aethys is the best. You want good hard money? Go to Aethys. Don't even call me, I'll send you to Aethys. No, I can broker too, I do hard money, but it's not my bread and butter. It's not what I like. I almost feel bad doing it. But
Where's your office?
what's that?
Where's your office? Or do you work out of the car?
I work out of that's Parker actually, at Starbucks. No, I have an office here in Santa Barbara and in Las Vegas. But with what I'm about to show you, you'll see I have a different kind of life. I have a different kind of system, and I don't think any of you have ever seen anything like it. Huh?
The business card.
No, I got them right there though. Everybody, when I'm done talking, I'll give a business card to. Yeah.
Where do you prefer to invest?
What's that?
Where do you personally prefer to invest?
I invest in nothing right now. In the past, I owned Las Vegas Hard Money LLC. I lent a lot of hard money. My own money, other people's money. The only thing I believed in was real estate and hard money.
Did you create
And I
your own-
did it in a big way,
Did you
and I
create your own
failed in a big way. No, that's for vesting and millionaires. I never quite got there. I fell from grace before that. Right now, my concern is just making piles and piles of cash. And I've gotten real good at that. So I'm just kind of sitting back and I'm the guy with the cash.
Good.
And investing in nothing, to be honest, right now.
So do you compare, I mean, as a buyer, do you just compare, ask for APR and that's it, put the phone down and just ask 10 people? Is that how I should be shopping for a loan? Or do you think we should ask 10 questions about origination fee, this fee, that fee? What's the
All of
guarantee
the
of
time is
closing?
wasted until you provide all of the documentation to the people you're shopping for a loan with. And we'll get into that. Because you can tell them, oh, I'm great, and I'm cool, and I made this much on my W-2, and my FICO score is 780, and I'll say, there's nothing I can tell you. And we'll get to how I pre-qualify people. And to me, it's the most important and fascinating and loving part of this presentation for me. I mean, I could kiss and hug my little system and staff, but we're almost to that point too. After that 0.5% down FHA California Access Program, it's very cool for people that, you know, an FHA will allow the mom, dad, grandma, grandpa to gift the 3.5% down, or if they only have a couple grand, the rest can come from mom, dad, or any immediate family member. But if they have a friend, Guido, that wants to lend them the money, I'm not one to judge, but Guido's your cousin. Underwriters can't prove someone's not a cousin. Okay, that's a fact. So instead of having, you know, they don't have an immediate family member, not all family members have just money sitting around, but they have a close friend that's willing to lend them the money on a little side note that I know nothing about, don't freaking email it to me ever. Then I'm good with it, just on the gift letter, under nature of relationship, cousin. Go ahead and try to prove it's not underwriter. If they know they can't, so they'll never fight it, and it goes right through. Anyways, it's just a neat little loophole. Don't do that. It makes me read. Well, I don't even need that yet. Next is Part 2. Hate them. Hate them. I do them, but I hate them. So if someone's upside down and owes a couple $100 grand more than their house is worth, and they're dumb enough to refinance, you can send them my way and I'll make money on it. I'll even kick back half of it to you. No, I'm just kidding. That's a little joke. Last time I was here, last time I was here, I announced my summertime promotion, and anybody that refers me, someone that refinances or buys a house, I blasted this out to a database of like 4,000 people also, and that's what got me in trouble. But anyways, I offered first deal, you get a new iPad, 16 gig Wi-Fi, for all my realtors also, for all my realtors. And the second deal they sent me, they get a new iPhone for us. And it goes till September 22nd, so I said, if it doesn't close until after that, you want an iPhone 5? It's on me. State of Nevada, I guess, Mortgage Lending Division thinks that that's the Section 8 RESPA violation, and sure enough it is. I didn't, but I see realtors giving away moving vans and big screens and trips to Hawaii. How do you guys do it legally?
You don't email it.
No, in Nevada, they do, and it's on Facebook, Brandy Whiteout. So I just figured realtors were allowed to, but is that a
In our office, they send out an email within the office.
Yeah, well, but then in Nevada, like, let's say Brandy Whiteout, she owns Innovative Real Estate Solutions. She's #4 realtor in the state of Nevada, and I have the honor of doing her business. She gives away, well, it changes. It's a TV, or we pay for your movers, or send them on a cruise and stuff like that. Yeah, like, how is she doing it?
Promotional marketing.
Yeah, but it's just, I'm not allowed to give away a gift of anything. I
It's
bet.
a gift, you're not allowed. Maybe
I'm
in Nevada
not.
it's different, in California,
Because
very
you're
strict.
You're not allowed.
We can't advertise gifts. Title companies got into trouble. for doing
Yeah,
that.
title can't do that.
They can't even pay for a lunch to sponsor an event now in California. That's just asinine.
It's all about.
Welcome to California.
They should. If I want to compensate a realtor, and I will anyways, okay, as long as I don't think it's the jerks that reported me to the MLB, I'm going to honor my promotion. No, I'm not. Because this goes on.
Good joke.
Totally
story.
You get nothing. Oh, they gave me a caution letter because I didn't execute. I didn't perform on it. So if they wanted me to fight, I got some nickels to rub together. We're gonna win. But they didn't sanction me. I got a letter of caution, and it says Mortgage Lending Division. In California, I'm overseen by the Department of Corporations.
Okay.
Okay, in Nevada, I'm overseen by the Mortgage Lending Division.
They're tough.
Okay.
They're very tough.
They're tough.
NMLS, they're very tough. Yeah.
Well, NMLS, they didn't report me to because the
Very
people that
tough.
reported me didn't know about them. But yeah, I've got so many fingerprint background and checks and
Yeah.
yeah.
Watch them.
How do you know about it? Did you
I'm a broker.
you were lending? Oh,
Yeah, I have a
mortgages?
mortgage company.
Oh no, where? Around here?
California,
California? Okay. All right. Where's it based out of?
Santa Cruz.
Okay, cool. Streamlines, Well, she can verify everything I said is gospel. But anyway, I thought you were a real estate broker since
I am.
1981.
Is that
You
true?
do both? Yeah, but you do your own financing. I was excited about